Why Canada's resource boom matters to global investors. Right now, while most investors are focused on U.S. tech stocks, artificial intelligence, and interest rate decisions from the Federal Reserve, a powerful shift is quietly taking place just north of the American border. Canada is entering a new resource supercycle, and this boom is not only reshaping its own economy, but also the future of global investing. For U.S. and international investors, understanding what is happening in Canada today could mean identifying one of the most important long-term opportunities of this decade. Canada has always been rich in natural resources, but what makes this moment different is the type of resources the world now desperately needs. We are moving into an era driven by electric vehicles, renewable energy, artificial intelligence, data centers, and national security concerns. All of these industries rely on critical materials like lithium, nickel, copper, uranium, rare earth elements, and natural gas. Canada happens to sit on some of the largest and most reliable reserves of these materials in the world. To understand why this matters, we first need to look at the global picture. Countries are no longer just competing in technology, they are competing for supply chains. The US wants to reduce dependence on China. Europe wants energy security. Emerging markets are racing to industrialize. And global defense spending is rising. In this environment, access to stable, friendly, and resource-rich nations becomes a strategic advantage. Canada fits perfectly into this role. Energy is one of the first pillars of this boom. Canada is already one of the world's top oil and natural gas producers, but now it is also becoming a major force in clean energy. Massive investments are flowing into hydroelectric power, hydrogen production, carbon capture technology, and next-generation nuclear energy. Uranium, in particular, is gaining renewed attention as countries reconsider nuclear power as a reliable, low-carbon solution. Canadian uranium producers are becoming increasingly important to global energy security. The second major driver is the electric vehicle revolution. Every electric car requires large amounts of lithium, nickel, cobalt, and copper. These are the core materials inside batteries and charging infrastructure. Canada has large deposits of these metals and is rapidly building domestic supply chains, from mining to processing to battery manufacturing. Major automakers and technology companies are investing billions of dollars in Canadian projects to secure long-term access to these critical materials. The third factor is geopolitics. Resources are no longer just economic assets, they are strategic weapons. The U.S. government has officially classified many minerals as critical to national security. Relying too heavily on rival nations for rare earth elements and battery metals creates serious risks. Canada, as a close political and military ally of the United States, becomes the natural alternative supplier. This strengthens long-term demand for Canadian resources, regardless of short-term market cycles. Now let's shift to what this means for investors. Historically, resource booms create long investment waves that can last for years. When global demand rises faster than supply, prices increase, profits expand, and capital flows into exploration and infrastructure. Early investors often benefit the most, long before the trend becomes obvious to the general public. Many Canadian mining and energy companies are still trading at valuations far lower than U.S. technology giants, even though they control assets that the entire world needs. This valuation gap creates potential upside, especially if commodity prices remain strong and government support continues. Institutional investors are already positioning themselves. Pension funds, sovereign wealth funds, and large asset managers are increasing exposure to critical minerals, energy infrastructure, and clean energy supply chains. Exchange-traded funds focused on Canadian resources and North American battery metals are seeing growing inflows, signaling that smart money is quietly building long-term positions. For U.S. investors, there is also a currency angle. During commodity booms, the Canadian dollar often strengthens against the U.S. dollar. This means American investors can potentially benefit not only from rising asset prices, but also from favorable currency movements, providing an additional hedge against inflation and dollar weakness. Of course, no investment theme is without risk. Commodity prices are volatile. A global recession could temporarily reduce demand. Environmental regulations can slow down mining and energy projects. and technological shifts could change which materials are most valuable. This is why disciplined investors focus on diversification, spreading exposure across energy, metals, infrastructure, and clean technology supply chains rather than betting everything on a single company. What should investors watch going forward? Government policy will be crucial. Subsidies, tax credits, and strategic partnerships between the U.S. and Canada can significantly boost the profitability of certain sectors. Supply chain developments such as new battery plants, mining permits, and processing facilities will signal where the next wave of growth is forming. And global political tensions will continue to highlight the importance of secure, friendly resource suppliers. In many ways, Canada is becoming the quiet backbone of the next industrial and technological era. While headlines are dominated by artificial intelligence, stock market rallies, and central bank decisions, the real foundation of the future economy is being built in the form of energy systems, mineral supply chains, and infrastructure. These are the assets that will power electric vehicles, data centers, defense systems, and smart cities for decades to come. For global investors, and especially for those in the United States, ignoring Canada's resource boom could mean overlooking one of the most important structural trends of the 2020s. Because in the modern world, whoever controls the resources controls the growth, the security, and the future of the global economy. And Canada is positioning itself to be one of the most powerful players in that future.